It does take us to our talk of the tape. Amidst a broadening market, how reliant are we on Nvidia and those other tech heavyweights? Let's ask Dan Greenhaus. He is chief strategist with Solus Alternative Asset Management with me here at Post 9. Are we as, good to see you, are we as reliant on Nvidia and these names as we once were?
I mean, by definition, no, because a lot of the other markets picking up some of the slack. But listen, this isn't the most important earnings report ever. In the last Nvidia report, maybe the one before that also, were crucially important. I don't think there's really any discussion right now about demand not equaling supply, and I don't think there's any expectation that the company's going to have negative commentary about 1 quarter forward or 2 quarter forward.
Why is this less important than the other times?
I think there was nervousness about the company's ability or about the amount of demand out there to justify the move in the stock market, the move in the stock right now. And I just from anecdotal conversations around the street, I just get the impression people are more comfortable, which maybe opens up the likelihood of further downside if something does miss. But I think people are just comfortable with the idea that demand is there. It's not as uncertain as it might have been, call it 1 or 2 quarters ago.
So I want you to listen to what Rick Reeder told me a couple hours ago on Halftime about where mega cap stocks are, like Nvidia, how much good news is already in these names, and therefore what we should expect on the other side of these results. Listen to Reeder.
I think the golden age of watching, this incredible tech sector promote top-line revenue growth and earnings growth and free cash flow growth, I think we're done with that. I think, by the way, I think there's still good numbers, but I just think, gosh, you priced in an awful lot at this point. And it's okay. It's just okay, though.
Okay, that's Rick Reeder. Just okay, though. Is just okay good enough for where these stocks are trading from a valuation standpoint?
I mean, probably not. Listen, I'm not going to disagree. Rick is usually right, and I think he's probably right there. But at the end of the day, the demand for these chips, obviously there's a transition issue with Blackwell, and I'm certainly go get Dan Ives if you want the details. But obviously there's an issue with the transition, although I believe that's a couple of quarters forward. But from a from a broad market standpoint, there are other things going on. Post what happened with Japan, some of the hotel stocks like Expedia and Booking, GM and Ford, some of the card companies like American Express, all the warehouse companies, Walmart, Target, Costco. There's a lot going on here in the market that's not just mega cap tech. And so from a weighting standpoint, obviously these are crucially important names, obviously. But from an investment standpoint, for those of us that don't traffic in mega cap tech, there's a lot of other stuff to do, and that's been the case for some time, and I would expect it to be for the immediate future as well.
You're making the case for the broadening that you clearly believe in. And by the way,
mind you, I've been making the case for the broadening before the broadening happened.
Yes, you have. In fairness, you have, and also in fairness, before the retail sales report came out, before Walmart's earnings came out, and some of these other retail names that were actually decent. You cautioned us about being too negative on the consumer.
Sure.
So you still maintain that view?
Oh, yeah. I mean, listen, jobless claims, which are your, as I always used to tell clients and I tell investors now, you don't need a PhD, just watch jobless claims. And they jumped up 250,000 or so. They've come back down a little bit. That's your most timely indicator. The credit card data that comes out of some of the banks, Citigroup, Barclays, have done a good job of aggregating their branded card spend patterns, and that provides you some timely data. But at the end of the day, the jobs market's been holding up. Consumer confidence today we saw is not terrible at all. Obviously, it's terrible on a relative basis, not on an absolute basis. And we heard from Walmart, which does $600+ billion in revenue a year. Obviously, Target, which is a little idiosyncratic, but still had good things to say. And I don't see the worry about the consumer in general. Again, for the 100th time, we know the low-income consumer is under a little bit of stress here, but income growth has been fine. The job market's holding up, and this incessant worry about the consumer has proven false for a year and a half now, and I don't know why it's going to change tomorrow.
When I tell you that real estate's leading over a month, utilities are second, staples are third.
Sure.
Does that make you feel great about the market? I don't mean to ask it in a leading way. Those are generally viewed as more defensive sectors, but when you do have yields coming down, they become more attractive because of the yield they offer.
Yeah, what I would say is, first of all, I'm not positive that utilities are purely a defensive play. I mean, obviously, there's a yield play at work here, but if we look at something like Vistra, there's nothing.
Well, sure.
But still, there's nothing defensive about that idea. About real estate, I mean, listen, if viewers have not looked, go take a look at the charts of SL Green, Vornado, BXP as well, I believe. These stocks are well off their lows on the idea that the worst of the New York City real estate and office collapses is behind us, and I think that's based on their quarterly earnings. That's probably true. And again, it just gets back to the idea that there are other things going on. Does it make me worried about the market, that those are the names leading? No. At the end of the day, mega cap tech has such a large weighting, it's hard for anybody else to do any heavy lifting beyond what those names do. And so we are, until that math changes, we are at their...
Well, it's never going to change. It's not going to change anytime soon. I mean, these stocks have such a heavy weighting within the S&P. So at the index level,
yep,
they remain critically important. The way that the S&P goes, you know, as so goes the S&P, or as goes the S&P, so goes these mega cap techs.
They're tied together. That's right. Again, my point would just be, and Solus doesn't do, as I've said 100 times, we don't do any mega cap tech.